All right, we were talking earlier about the latest developments in the residential real estate market. Well, now we turn our attention to what's happening in the commercial real estate market. Take a look at this chart. Not so great. U.S. commercial property prices falling to an 8-year low back in August. Now, at the same time, we're seeing commercial mortgage defaults on the rise. Well, despite these numbers, one of the country's top 10 commercial real estate lenders, Walker Dunlop, went public last night, pricing at $10. You can take a look and see where it's trading right down about 15 cents on the day. Well, Walker Dunlop is this year's first IPO in the mortgage bank subsector, and I'm going to dare to say probably the only one, given that we're only 2 weeks out to the new year. Well, joining me now is the chairman, president, and CEO of Walker Dunlop, William Walker. Congratulations, by the way, on going public.
Thank you, Lisa, very much.
That's a big step for the company.
It is.
It's a family business, I understand, right?
It is.
All right. Well, congratulations. Let's though talk about the real estate market. Why price the deal now?
We see commercial real estate recovering over the next couple of years, and the volume of refinancings in the commercial real estate space are about to spike. And so for a company of our size, that is, as you said, the 9th largest commercial real estate lender in the country today, the refinancing opportunities that are coming up are massive. And so as a result of that, for us to be able to grow and acquire new companies and acquire talent, we thought that going public now is the right time.
I want to talk to you about the growing and maybe acquiring other talent or other companies in just a minute, but let's talk about the commercial real estate market, just generally speaking. I know each commercial real estate lender really specializes in a particular sector, but a lot of people say that we haven't seen the worst yet in commercial real estate, that, you know, residential sort of bottomed out, but that's debatable, but yet we haven't quite seen that happen in commercial real estate. Do you disagree with that?
I do a little bit. I disagree with it only in that many of the mortgage REITs and also the property REITs went out and raised a lot of capital during the downturn and have raised a lot of capital in 2010. And so as a result of it, their balance sheets are a lot healthier than many people believe. And as a result, a lot of the REITs dodged the bullet, really, and they're well capitalized today, and their properties are operating very well. You also see a big disparity between the major cities in the country as well as anywhere other than the major cities. So Washington, D.C., New York, Chicago, San Francisco, if you own commercial property in those cities, there's a lot of demand for them and there's plenty of capital to finance them. If you're in a secondary or a tertiary market, it's a different story.
What do you plan to do with the money you've raised? Getting back to that question of where do you see acquisitions potentially? What markets do you see growth in?
Right. We have a huge opportunity to grow in our core market, which is financing primarily multifamily properties, apartment buildings, but as well as other commercial asset classes such as office, retail, and hospitality. So we have 8 offices across the country, and so we will both hire into those offices as well as potentially acquire smaller mortgage banks that have made it through the downturn, but may not have weathered the downturn as well as we did, and therefore would be good acquisition targets for us.
How do you see the competitive market versus other large banks? So the J.P. Morgan, the Wells Fargo, the Citibanks of the world.
Right. Our big competition in our space are the big banks and the big life insurance companies. I would just say that I'm very pleased I'm not a bank CEO. Being a publicly traded finance company, but non-bank finance company, is a huge advantage given the changing regulatory landscape. Dodd-Frank puts a whole layer of regulation on them that, quite honestly, I don't know that they know where Dodd-Frank is going to take them over the next couple months or years.
Does that give you a competitive advantage in that space?
I think it does, to the extent that we don't have to react to it today. And clearly Dodd-Frank can come and start to bring companies like us underneath it. But for right now, we're basically unscathed by Dodd-Frank, and as a CEO trying to channel our way through, it's nice not to have to worry about that.
When regulation isn't hanging over your head. Okay, well, thank you very much for joining us. Congratulations on the pricing of the stock. This is William Walker, CEO of Walker Dunlop. The ticker is WD.